right. Welcome, everybody. And maybe we do a first quick introduction with our distinguished panelists. Right? So maybe we start with you. Quick introduction, 20 seconds each.
So I'm Nicolas Faquet, the CEO of Roojai, which is a direct-to-consumer insurance company in Thailand, focusing mostly on car insurance. We do about 300,000 cars covered.
I'm Axel Baur. I'm the CEO of Amplify Health. Amplify Health is a health AI platform services company founded 3 years, 3 months, 4 days ago. And background is to serve within Asia health insurers end-to-end with a full stack of services. And we'll probably get into this during the dialogue.
Hi, this is Fred from Hong Kong. Hi, I'm the co-founder of Bowtie. We're the first Hong Kong life insurance, digital insurance in Hong Kong. A bit about my background, I'm an actuary, I'm a serial entrepreneur. So prior to Bowtie, we founded 2 other insurance tech startups. We only operate in Hong Kong right now and look forward to meeting some of you.
Hi, I'm Raunak. I'm the co-founder and CEO of Igloo. We are a Singapore-based full-stack InsurTech with operations across Southeast Asia.
All right, so the topic is the in the hot seat of an InsurTech CEO. I think all of you have a real passion for innovation and disruption, and like to know, what is your specific role and purpose in building out your companies today? So maybe we start with you. We go down the ladder here. Yeah.
So, I mean, for me, it's a bit of a life story. I came to Singapore in '97 as a chief actuary for AXA at the time. AXA just acquired the UAP, and then I was sent to UAP had a subsidiary in Thailand, and I was sent to Thailand to try to explain to the CEO how could we make motor profitable in Thailand. And basically, at the time, and still today, the market was mostly operating as a one car, one price. So some insured driven, doesn't matter who's driving the car, one car, one price. And trying to convince him that, okay, we should segment and we can get the good risk and, like a junior actuary selling my pitch. And at the time we say, no, it's impossible. The distribution channel, the agent and broker don't operate this way. There's no way you're going to be able to do that. Fast track 17 years later, 2014, I look at it again. Nothing has changed, still the same story, one car, one price, and decided that to make it change, I needed a double disruption, a pricing disruption, and a distribution disruption. Because the only way to get that pricing message to the market and to underwrite was to bypass the agent and broker and to be able to go direct to consumer to collect the data for the segmentation. Fast track 10 years later, 2025, we're still probably the only one segmenting in Thailand. So the market, despite our presence, has still not changed, and that's so the difficulty for the incumbent to evolve on that spectrum. And today we do 300,000 car insured on a pure segmented basis and be able to get the good risk in the market.
Yeah, a bit of a different angle. I'm a molecular biologist by training, long time ago. Did my PhD in 1994 and had a first-time biotech startup at that time. In the modern days, we would call them, we did a Wuxi Aptech, Wuxi Bio thing, a CDMO. Was sucked up by a vacuum cleaner called McKinsey, and they spun me around for quite a few years. And in that stint, I went to Asia in 2013, came to Japan, and been now in Asia for 12 years. But I think the red thread in this is healthcare. And I mean, one of the things that coming to Asia is just looking and seeing how broken healthcare is. And the opportunity to build out Amplify Health to make healthcare affordable, accessible, and effective here in the region was one of the big driving forces for me to do what I'm doing here right now. And yeah, I'm happy to share more, but it's really the inefficiency of healthcare. And I mean, we had a great panel of insurers here, but at the end of the day, the insurers are really just at the very top of the pyramid when it comes to insuring the population that they're insuring, and now creating services, platforms to allow insurers to create products that are indeed helping the broader middle is one of the passions that is driving Amplify Health.
Just a bit about some context about the problem we're trying to solve. We believe insurance is fundamentally good. It provides the safety net to the family, provide access to healthcare. Despite its benefit, right, insurance is quite often misunderstood and is mistrusted because of the way that we design, and it's because the way that we're selling insurance. Even nowadays, 2025, insurance is sold one-to-one, face-to-face. We think the experience is quite outdated. At the same time, the way that we design the channel is pretty much incentivizing the agents to sell more saving product than the protection product. So for us, the vision is really fix the protection gap. To be honest, I still have friends who can't afford private healthcare in Hong Kong, can't afford cancer treatment because of the cancer drug is so expensive. So for us, our mission is really, okay, let's fix insurance by providing simple life and health protection directly online. So you can use technology to give control back to the consumer. You can actually go online and buy and save 40% in terms of the premium to make it accessible. And what we realize is the problem we're trying to solve is not just about putting the product online, because human psychology, they won't just go online and unlike GI product, which is high frequency, and for what we do, it require a deep understanding of why they actually need insurance. So what we learn is that we don't sell, we educate. So we spend a lot of time trying to educate the consumer why they need that. And we're trying to produce a lot of content. In fact, we actually run an in-house content and video team, and that allow us to produce a lot of content that actually relevant. Because what we learned is, at the end of the day, customers don't really care about ads. They don't resonate. So if we need to be able to prove the unit economics so that at the end, the company that we build is actually sustainable, we need to be able to prove that build a very powerful digital marketing machine such that the conversions, everything is actually relevant, so that at the end, we're able to manage the CAC, which is the cost of acquisition, within a lot lower than the lifetime value. So we're pretty excited about the opportunity. We think a proven digital insurance channel can be very profitable compared to other SaaS model. Because at the end, think about it, right? If you compare to other SaaS model, where can you find another model where a customer will actually pay premium lifetime, at the same time the premium actually increase with the age? So it's a pretty exciting time.
Yeah, so I come from a consumer internet background, so a relative outsider to insurance, and hence not having a great deal of subject matter expertise in a 300-year-old industry, it was quite obvious that my team and we had to take a very first principles approach to problem solving. And I think innovation and disruption at Igloo are the cornerstones of what we actually do. So just to give you a bit of context, today at a monthly level, we facilitate the distribution of more than 70 million policies. And I mean, that translates to close to 30 policies being distributed per second, which could go up to almost 300 policies per second at any given point of time. And you can imagine that if you're doing this kind of volume in a slow growth industry, we are essentially tapping into new customer pools. And how we have gone about doing it is by using a combination of both distribution and or product-led innovation, right? So to give you an example, if you see across Southeast Asia, now there's very widespread usage of QR codes for consumption, right? I mean, you're eating at an F&B outlet, you'll be using QR codes, you'll be purchasing an electronic item at an electronic store, you will be using QR code. And what we've tried to do is we've tried to piggyback on that aspect, because you have a very high frequency transaction type that's happening, and the consumer behavior is massively, I would say, replicated across various stages of the month. So we came up with products that were very contextual to it, and as a result of which we were able to tap into a consumer pool or a need pool that people were not addressing into. And there are more examples of it, like for what we have done in the weather index insurance space. As you know, Southeast Asia is one of the places in the world where they are the most exposed to the changes in climate and all. And the insurance products that you have as of today are yield-based or what you call as covering for basis risk, which require a lot of manual work on the ground. We've come up with a product that reads weather station data, which is fairly structured in nature, to unstructured data that comes from third-party sources or from satellites and all, and come up with a product that could identify with a very high confidence interval as to what is there going to be flooding in that area or not. So this has been the cornerstone of what we've done so far, and this is going to probably proceed as we move along forward.
Okay, I'm going to be a little provocative now. So I've been coming to ITCA and many insurance events for the last 5 years. A lot of InsurTech CEOs have a grand vision, like a lot of good ideas, right? But what makes you certain that your vision or your idea is going to work? Like, what is the proof point that you have that you can tell the audience? Can we go back to you?
No, I mean, look, for any idea to be, let's call it, to see the light of the day, right? Ultimately, it needs to scale, and it needs to, the real definition of economies of scale, right? It needs to grow while bringing down the unit cost of implementing that idea. I think that is what I would say gives me a bit of comfort that what we are doing today, and it's reflected, right? I mean, today we are 200 odd people doing business across 8 countries and working across 70 odd partners. It's the smallest team that is probably pulling this off. And why we have been able to do it is because very early in our, I would say, journey, we invested a lot into a tech system. We couldn't have done anything else. I didn't know insurance. A lot of us didn't know insurance, and that probably worked in our favor because we were able to, in a way, question the myths that a lot of people thought were like universal facts, and were able to, in a way, break them down and come up with solutions pertaining to that.
What's your proof point?
Well, in the early days, in using the startup terminology, is to prove the product market fit, right? So what we're trying to do is to able to distribute life and health product directly online. To be honest, when we started off, there's only about less than 1% directly online. And what we're doing is, okay, can we build a channel so that we can distribute life and health and able to prove that it's going to be sustainable and able to sell 1,000 policy? It's not easy. Obviously, you can raise money and just spend all the money on advertisement, but it won't be enough because what we realize is the cost that you spend to acquire customers is higher than the lifetime value. So it's pretty, what we able to prove that is if we are not able to prove the efficiency, there's no way that we can get a second funding. So to me, a big part of that is, okay, trying to prove that product market fit by improving the unit economics, that's day one. Another one is the customers, right? At the end, I do have a lot of friends beside us. These are the tech-savvy, well-educated individuals. They actually don't want to directly buy from agents. They prefer to buy online. So it comes down to, okay, can we provide the happy experience? Can we able to prove the unit economics so that we make sure that the channel that we build is actually sustainable and long-lasting?
I'll try to give a bit of a longer answer, but I think the first thing is, I mean, there is clearly a gap in the market for what we're doing. Yeah? And I think the first question I ask myself, in this gap in the market, is there a market in that gap? Yeah? And I think if I now reflect on 3 years, we're now operating in 7 countries. Yeah? And for me, operating in 7 countries here in Southeast Asia is probably the first proof point of the work that we're doing. I think the second proof point is that if you look into the solutions that we're providing, we're not just providing tech and with tech enabling the clients that we're serving. We're actually also delivering or providing an end-to-end service that allows our clients to actually extract value from the technology that we're providing. I'll give you an example. And Mohit talked about this when he talked about the universal data model that Pru is building. I mean, I think the biggest ambition that I think all insurers and all clients that we're serving have is to say, what is the universal data platform that you have and need in order to actually make data in healthcare comparable within a hospital, between hospitals, and across countries. And as we all know, the insurers here in this world are sitting at the short end of the stick and not on the long end. And what we need to do is to change this paradigm. And with the data that we provide, with the comparability of the providers that we then create on a disease level. I think we are putting tools in place that empower clients to change the paradigm when it comes to medical cost inflation, when it comes to negotiation with the providers, and as I said at the beginning, creating new products that allow them to actually tap into population segments that they haven't done before. And if you look at what we're doing in one client in Thailand, we have been able to lower the total cost claims, by 2.5%. Now everyone will say 2.5%. 2.5% on a claims base of $1 billion, of $2 billion is a lot of money. And I think this is probably the second proof point to the ambition that we're having. And I've learned over the 30 years in healthcare that healthcare is a very, very slow climb. I actually climb, and it's a very slow one. Yeah? But if you're patient and resilient and have the tenacity, you can get this. And the third proof point I would say is that, I mean, the external are recognizing us and awarding us with the work that we're doing. And with these three, I think we're on the right track.
I mean, for us, the assumption was if we bring a cheap price to the good risk in the market, we will be able to grow quickly without jeopardizing underwriting profitability. 10 years later, we today have 300,000 customer in force, growing about 35% year on year, and delivering a 60% loss ratio for the last 4 years. So again, demonstrating that you can give a cheap price provided you risk price correctly and grow quickly thanks to that price competitiveness.
Okay, thank you. Just switching gears, I'm going to talk about your operating model, but also investor base. I'm going to ask two of you. So I guess across the panel here, you have different kind of investors. Financial investors, strategic investors, corporate ventures, et cetera. How do you maintain the balance between, investors investing, also extracting the best of your investors, control versus autonomy? Like, how do you balance that as a CEO? We'll start with you, Nicolas, and then you, Raunak.
So I think the control is not an issue if you've got investors who understand strongly your business. So my previous company, I was its second founding company. So in the previous company, we had two PE, which were not from the insurance world, and it made everything very difficult because they focused on the wrong things, and that was one of the things that led to the.
Are they still your investor?
Sorry, on the previous
before.
company. Okay. In this round, it is with Roojai. That was a big learning of the previous one. With Roojai, we have HDI, which is an insurance company. We've got IFC, which is very knowledgeable in the insurance world. We've got Primary, which is a specialist VC focusing on insurance. So I've got only people who deeply understand insurance, the value chain, what it is to be a risk carrier, what it is to go direct to consumer and to price and manage the risk. And I think once you've got that, when you've got people which are knowledgeable, I think most of the issues are solved because there is an understanding, and it's not about control, it's about convincing, it's about listening, it's about getting their experience and reaching a compromise. I can have one of my board members in the assistants, and I can say over the last 10 years, there's not been one decision taken which was not unanimously taken from an operational standpoint. So we've always reached a full compromise, and that's very nice to be.
Raunak?
Yeah, of late I'm being asked this question quite a bit, so I don't know if this is a signal towards something, but look, the expectation that you have from your investor base, right? And we have, surprisingly, a very diverse investor base. We have financial investors as well as impact investors, given what we do. A large part of it is a function of what stage you are in as a company, right? And I believe most of us on this panel have crossed that product market fit hurdle. The investors of today from companies of our shape and size are looking for, can you scale without having to invest disproportionately into what you're doing? But most importantly, do you have a very clear path to profitability and a substantial exit rather than it being just a number on an Excel sheet, right? So I think a large part of alignment stems from the fact that you are aligned on these basic principles. And we have examples where our impact investors have, in a way, given us a lot of leverage with respect to how do you go out in certain countries and capture the uninsured and underinsured pools. And if they are impact investors, they have that clout in that sort of a forum. So ultimately, for me, if you ask, it's the alignment of purpose. Every investor invests in a company, most of them invest in a company with this dream of having a 5x, 6x sort of an exit or crossing their IRR hurdle, right? It's all financial at the end of the day. But during the course of that journey, are you able to create value that is a lot more meaningful and aligned to both sides? Is I think that's what matters.
Okay, thank you. Moving on to our last question, a little provocative again. You know, you guys are CEOs for I don't know how many years, I guess more than 1 year and more than 5 years in some cases. If I ask the question, and this is more like an advice to the audience here, what is the biggest regret? What is the biggest decision that you regret making since you became a CEO? We start with you, Axel. That you would like to reverse.
Well, I think it goes back to also a question that was asked in the previous panel around people. I think the big regret I have is not taking people decisions faster. I knew it early. I knew it early, and I dragged on. And I think it's something that if I had to restart again, I would obviously change this. But taking people decisions fast and swiftly is the biggest regret.
Fred?
I would say that it's focus, a bit of some background, right? So we founded 3 startups before, and just like any other founder, right? Sometimes we keep chasing different shiny objects. We're too excited about different opportunities. I would say to founders, you rather to be able to focus on a very niche markets, like a micro segments, and serve them extremely well. Because I feel like quite often you are aiming for that 0.1% of a very big market, and maybe even easier if you just focus on a niche market and that the big company overlook, and because it's so niche that you're able to personalize the service, do it very well, and dominate 50%. So I would say when I look back, having that deep focus to have a deep understanding of the customer pain point and do it very well. Don't worry about that the segment is not big enough, because that accumulated advantage will give you the momentum, resources, and credibility to move to the adjacent segments and up markets. So yeah, focus and do it very well.
So when I started Roojai, we committed with the team that we will focus on Thailand and we will only do Thailand. And I spent 6 years doing that, and then starting to raise Series B in 2021, talked to hundreds of VCs, 90% of them saying, oh, you're only a Thai play, it's not interesting, we're looking at a bigger Southeast Asia picture. And so after repeating and repeating, I convinced myself that we needed to expand to Indonesia, which we did. 2 years later, doing our Series C, 90% of the VC telling us, oh, why are you not focusing on Thailand? Why did you expand? Indonesia is so difficult. So not sticking to my gut and say, look, we should be a single country and focus on what we do and don't listen to the VC hype and trend is probably the biggest one.
Very good. And we'll end with Raunak.
I mean, 7 years ago, in my youthful exuberance and being a Star Wars fan, I jumped into this industry thinking that pretty much like what I did in the consumer internet phase, I will change it with brute force. I think looking back, an elder version of myself will probably tell that I could have been a bit more circumspect about how old this industry is, and thereby to be respectful of certain things are the way they are, and you cannot change it.
Very good. I think that's time's up for us. Thank you very much. Thank you for the panelists here for the insightful discussions. Thank you.